think I'm live. Okay, so this is going to be a quick one today. I wanted to discuss an automaker profitability heat map that was posted. Just talk through this. Talk through why Tesla is the only really pure play EV play that is profitable out of all of these that is producing at scale. Hey, Nairo23, how you doing, man? So real quick, let's take a look at this chart, okay? Let's look at the biggest EV players, straight up EV players are mostly at the bottom. Lucid, VinFast, Fisker, bankrupt, NIO, Polestar, Xpeng, Zeekr, Leap Motor, Dongfeng, SAIC, Li Auto, Geely, and then you got wannabes, and so when I say I can't even say pure play for these others that are up here because they do hybrids, just like BYD, who is up here and showing as profitable. Note Tesla's at 7.4%, but they're fighting tons of competition as we're seeing other automakers in the EV space having to heavily discount their goods. So they're selling these things for nothing. It makes the price drops on Tesla look like nothing. And so again, I just want to reiterate, if you look at BYD here, BYD is able to make itself look like the biggest EV company in the world because about 45% of the vehicles that they produce are plug-in hybrids. And these plug-in hybrids are much more profitable for them because they're basically a regular ICE car with a much smaller battery in it. So the cost is greatly reduced, okay? So they have heavy government incentives that I'm not even sure that we have a clear reflection of coming from the Chinese governments. In fact, all of these companies down here that are Chinese related receive heavy subsidies for their new energy vehicles, which again can be a pure EV play or it can be a hybrid. So that's it, right? So what I want to communicate in this is that Tesla has no real competition. If you remove all these hybrids, if you make it just pure EVs like the Rivians, the Lucids, the Fiskers, the NIOs, the Polestars, the Xpengs, the Zeekrs, they're all bleeding money. They're bleeding money. And the only ones that are remotely profitable are hybrid related companies where they can offset their losses through hybrids. I'm going to turn down my mic. I see it peaking a little bit here. But are ones where they can offset their losses through hybrids. So what happens if Donald Trump gets elected and removes in the United States the incentive for the $7,500 tax credit, which is also heavily benefiting legacy auto by providing them with discounts that allow them to be able to stay profitable or offset some of those losses through their hybrids, which are much cheaper and more profitable for them to make. I'll tell you, it's going to be a disaster for legacy auto. And eventually, with what's going on in China and their broader markets and their 325%, I'm just going to keep talking because I think this internet connection will come back. I am getting this fixed next week. So hopefully this will address all of the issues with the drops. But yeah, so I think in case you didn't hear that, I don't know if it drops out for you guys, but we're going to see that China can't keep up and keep subsidizing in a heavy way companies that are losing 52%. And companies in the United States that are losing 120. Companies in other markets like Vietnam, I think VinFast that are losing 200%. Lucid that's losing 400% and subsidized by the Saudi government, or I should say Saudi funds, sovereign funds. Like this is ridiculous. These other companies are dying, and so ICE is dying. Hybrids aren't going to receive the incentives they were, at least not in the United States. Trump is going to push. Lithium prices have fallen through the floor. Yeah, but that doesn't matter. That lithium prices have fallen through the floor, but building out the battery stacks and doing them efficiently has not. Even with lower lithium prices, you can only fit so much battery into a car. So you're either reducing the amount of range that it has significantly, or you're having to figure out how to make the technology better, which costs money, even if lithium prices have dropped. So you're right. Lithium prices are much lower. If we actually go over here and look at prices, we can go to commodities. We can do Control F here, type in the word lithium, And look down here. And you're right. Compared to the CNY from where they were years ago, even a couple of years ago, look at the prices that we had in November of 2022. We saw, I mean, we've seen a massive drop, 90+% drop in lithium prices. So all of that is true. Lithium prices are cheaper, but the actual efficient batteries that are trying to be produced, these companies don't have them. They don't have the automation that Tesla has. They don't have the innovation that Tesla has. These other companies don't have any of this. They just have massive government support, whether it's, again, and in the United States, again, hybrids are saving GM. They're saving Ford. It's their ICE cars that are keeping them afloat. But in China, they're just bleeding. They're bleeding profusely. And they have no real incentive to modify and make things better. Not to say cattle is different. Cattle does great batteries, okay? But they cost money, okay? It's not like the raw source of lithium makes it to where cattle doesn't cost any money and that these guys can just throw these in the EVs and be profitable. They can't. The redness in here is telling you that they can't, okay? This is look at Q1 of 2024. Look at the losses from Zeekr, Xpeng, Polestar, a Chinese company. People think that it was Volvo and that it's not Chinese. It's 100% Chinese. NIO down, losing 52%. And again, this is with subsidies, heavy subsidies from the Chinese government. There is no competition to Tesla in the EV space, on scale, in the world. It just doesn't exist, okay? It doesn't exist. And when we see Trump, man, I'm buying some Ferrari. Well, Ferrari's done quite well, and that stock hasn't really went anywhere. And they're transitioning to EVs too. When you can charge a premium for cars just because people like the name and the look, you can make shit tons of money. These other guys can't do that, though. We're talking about mass manufacturing here. So, and the other cars can't compete. Toyota isn't even trying. They aren't even trying. They're still talking about hydrogen and shit like that. There is no hope for Toyota. They're done. Hyundai probably makes one of the better EVs out there. But again, they're profitable because of their ICE business. It has nothing to do with the EV business. So the take that I'm trying to get across to you guys here today is there is only one Tesla. There is only one pure play for EV technology that will thrive in the years ahead. It is Tesla. They are the profitable company. They're the company that continues to push profit margins closer and closer and closer as they reduce COGS. These other companies just aren't doing that. And they're so far behind. And then when you incorporate full self-driving and you look at, let's just jump over here real quick, and you look at analysts that are starting to raise price targets for Tesla. And it went up a lot today. I sold like $60,000 worth of my calls, right? But here's some other stuff. Look at this. Morgan Stanley upgraded Tesla to its top pick in the U.S. auto sector, replacing Ford. Analysts forecast 40% upside target with a price target of 310. Piper Sandler, again, these are today, says Tesla may have solved the full self-driving puzzle. Reiterates $300 price target. They say FSD 12.5 is revolutionary. So not only can these other companies not compete with creating EVs that are profitable without having hybrids or ICE cars in the mix, but then you have Tesla that has much better margins, is receiving EV tax credits from all these other companies that can't produce EVs at the required levels. And again, maybe some of this gets rolled back by Trump. I actually think that's beneficial to Tesla because if other companies are on a even playing field with Tesla, whether it be, Chinese or any others around the world, they're fucked. And you got to remember too, Trump doesn't want cars to be made in Mexico, which is why Elon and Tesla have slowed down on their conversation about building the Mexican plant. He wants it in the United States, which means that all these other legacy car makers that have these that are producing vehicles in Mexico or other parts of the world, they're going to be fucking hurting for sure if he becomes president of the United States. So I just want to say, again, I just want to reiterate, there is a really large hill for these other companies to try and surpass. And I think the vast majority of them will not do it. Will some of them? Sure. They'll probably be Chinese, is my guess. Maybe there's a couple of American companies, but again, I don't know how well Chinese cars do here too. Because Trump, what is he talking about? He goes, "Hey, we have no problem. We want an even playing field with Chinese auto manufacturers." Here's the difference, though: they have to build their cars here, and they can't make them profitably here, guys. They can't do it. It's the heavy subsidies and the fact that they can pay Chinese labor absolute dick that allows them to be able to even survive. So he's being, I would say, very smart in this play. He's saying, hey, we don't want to prevent you from coming into the market. You just got to make them here. Otherwise, they're tariffed to shit and back. So all I'm saying is the narrative right now with Trump being the president of the United States and with these other EV companies is that the other EV companies are coming for Tesla. I've been listening to that since I've been involved in, back to 2017. And that Trump is bad for EVs or bad for Tesla and EVs and renewable energy and all this other stuff. And I think it's absolutely complete bullshit. I think that it'll actually benefit Tesla over the mid to long term. Maybe over the short term, they take some kind of sales related hits from whatever occurs. I don't care. Because again, the big thing is FSD. Use 12.5, check it out, understand it. Understand that these companies are not profitable. Understand that Tesla has a lead across the board. Across the board. And that's not even factoring in energy, okay? So I'm not going to make this a really long video. I'm going to try and keep it short. Again, there's just no competition, guys. There's no competition. So I'd love to see you guys in the market recap at 3. But remember, get rid of the noise, everyday noise and bullshit of price action and people's stupidity. Meet Kevin telling you that he's selling short on Tesla right now. He was doing that earlier before it launched 6%. Now it's at 4%. Ignore that bullshit. Ignore stupid people that are short-sighted. Look at the long term. And not even including the robots that are going to be working in factories next year and then be commercially available in 2026. Just focus on long term. Understand what's coming. Don't be stupid and short-sighted. And then you'll benefit from this. And if you don't do those things, you won't. That's really all I have for now, guys. I'm going to cut this one short. So you guys take it easy. Really appreciate you. And let's do it again here soon. Peace out, guys.